good example of how it's never too late to enter a trade. People very often say, hey, did I miss out? Is it too late to get into XYZ? It already broke out. And I always say, it's never too late to enter a trade. You don't miss a trade altogether. What happens is you miss a particular entry that might have been a low risk opportunity. And from that point moving forward, you can still get into a trade on that coin, but it might not have the same RR. Your risk profile is going to be different on the trade. So this is a good example where for the initial breakout, I identified this likely breakout right here. We got in, and then sure enough, within a candle or two, we started breaking out on TFUEL. It initially ran up quite substantially, and then, well, here, this is actually where I got in. So we went all the way down. My orders at 1325 and 1327 filled. And I was able to get in all the way at the bottom on this little sell-off. So with that entry at the top, it went up 11 and change. Now it's currently up 8.7%. However, if you feel like you missed out on this trade because it broke out and now you can't get in, while that's true, you can't get in with the original entry that I got, which was incredible. I was risking 2.7%, but I also bought all the way at the bottommost point of that last dump. You won't be able to mimic that, but you could still get in with a strong trade. What you want to look for is a repeat of the conditions that prompted me to get into the trade originally. So I identified this trade because I saw the retrace. I figured that was the most likely bottom for the retrace, which is why I set my orders there. I had identified enough support, my Ichima supports, various indicators on the 15 and 5 minute charts, since it was initially supposed to be a shorter term trade. And based on all that, I got in with that really good low risk entry. Now here, we're approaching a point where we're seeing a similar setup come to fruition. Now, on the hourly, you can see my 55 and 99 EMA is just crossed over, which is a very strong bullish indicator. Since then, we've been continually moving up. We have a solid uptrend, and we have EMA divergence. When they are diverging or moving away from each other, that's a sign that you're gaining increasing impulsiveness. So the impulsivity of this move is going to continue to increase, and that means you could build like a sort of a parabolic move where you start rising at increasingly rapid speeds, which could be great if you're trying to shop for big breakout plays. What I like to do in those scenarios are identify really strong supports so I can get in at the opportune time right near where it does that bounce before running up. So what I want to look for is strong support and resistance. I always talk about how support and resistance is the most important thing you could possibly learn when you're trying to learn TA and trading. The reasons why I've broken down in the past, but the gist of it is everything else is based on support and resistance. Breakout trading, short-term trades, longer-term trades, everything is dependent on support and resistance. Other tools that you use like Elliott Wave and Fibonacci, it's all related to support and resistance. So without that strong basis, you're not going to be able to use those other tools in your arsenal. So looking at this, I have my 55 and 99 dynamics, right? So you can see the 99 EMA provided an incredible amount of support right there. This was a little quick dump in the middle of a trade where I had my stop loss right below the 2 EMAs, locking in a measly 3% because I wanted to give it space to run. And sure enough, it came down and bounced exactly on the 99 EMA. So my Ichima model is in full force. I have a high level of confidence in it. Looking back, I can see a ton of resistance here on the 55 EMA, a ton of resistance here from the 99 EMA, got a really strong rejection. So there are a lot of instances where my EMAs are providing crucial support and resistance points along the path. Now we see them increasing again with that bullish uptrend, and they're diverging, which means we're going to see them continue to move upward, and we're going to see the 55 EMA, the yellow one, is going to continue moving upward with an increasing pace. It's going to start turning upward like a parabolic move if the price continues to move up rapidly. So what you want to watch for is an ideal entry where you get a strong bounce off of a support where you could buy in at the bottom and then ride the wave up. So what I'm looking for right here, if I was going to get into a new entry, I'm looking at this support that I have noted at 1407. You can see it was really crucial right here on this candle where it provided a ton of support before bouncing us back up. Then we had a couple more candles that came down. They didn't quite reach my support, but they got pretty damn close. So I have a lot of confidence in that support level, and I have a lot of confidence in my EMAs. You can see that it's moving upward, and inevitably they're going to converge. When they converge, That's going to provide an even stronger support zone right where that convergence occurs, and that's what we have where we have a confluence zone. This is multiple types of supports that are showing us confluence where they're in agreement at the same level. So that's going to be my target region. If we dip down right over here, somewhere within this range, if we dip down to that point and bounce right off of those supports, right where the 55 EMA and the 1407 horizontal support are, that's going to provide an incredibly strong launch pad for the next wave up. Is it possible it runs up and this candle just keeps going and we break out now and go up to 1520? Sure, that's obviously possible, but you don't want to just jump in looking for any gains. You want to jump in with the lowest possible risk, so you have a really good RR. Your risk to reward ratio has to be strong. So what I would do here, I would set an alert and say, all right, if we get back down to the bottom of this candle, 1418, I'm going to get a notification. As soon as I get that notification, I'm going to jump on here and watch it. And if we start coming back down and we're about to bounce off of this region, if it looks like we're continuously coming down, I'm going to set my buy orders right at, like, not necessarily 1407 right on the support, but somewhere between up to like 1410. So maybe 1410 down to 1405. I would set my buy orders in that range. That way, as soon as they fill, say they fill right here at 1409, I could set my stop loss right here. So it's got the support at 1407, the 55, and the 99 EMA are all within my stop loss range. My entry, supports, my stop loss. That's how I get into low-risk trades, because I'm only entering trades when I have a very strong support between my entry and my stop loss. And in this instance, my stop loss is only 1.4% below my entry, which means on a $1,000 trade, if this does fail, I'm only going to lose $14.20. On the other hand, if it does break out, I can make upwards of $500. That's that. Hopefully you understand what I'm looking at here, and hopefully that provides enough information for you to practice and work on your strategy a bit and start to utilize some of the tools that I've found to be very useful in my trading strategies. And if you have any questions, as always, feel free to hit me up, shoot me a DM or something, and try to provide whatever help I can. All right, later guys. Safe trading.